All right, so welcome to Currency Guys Beginners Training. First and foremost, this is not financial advice. This is just peer-to-peer tutoring and teaching on how to trade within the Forex market. Again, this is not financial advice. So I'm going to go ahead and share my screen with you guys so you can see what I have or what I am going to have here. Yeah, there we go. All right, can everybody see my screen? Let me know.
Yes, ma'am.
Okay. So the first things first is that we want you guys to focus on one pair. So if you are brand new to Currency Guides from the looks of it, I don't think everyone is brand new. But if you are brand new, you do want to focus on one currency pair. So you want to pick one. UJ does come highly recommended by Robert because USD JPY does follow structure the best. But you can pick any pair that you choose. All right. Reason why you are focusing on one pair. You're focusing on one pair because you will learn the movements and behaviors of that pair. You will recognize the patterns and you will know how to react to the market accordingly. We never want to predict the market. We always want to react to the market. So you're basically reacting to what the market is doing. You never try to predict it because by predicting the market means you are gambling. So you're taking a 50-50 chance. You want to react to it, and you want to react to it by following the guidelines that Robert has established that has made him successful for the last 5 years. All right, so for those who have not seen a chart before, we're going to move over to a chart, let you guys see that. And what happened? Okay.
Is your internet acting bipolar today?
No, I clicked on, I think, optimize share for full screen video clip. It looked like. No, when my internet acts up, it says internet unstable. When it acts up, it says internet unstable. All right, so if Chastity, if you could watch the chat group for me, that would be most helpful.
I will. Your screen looks blurry. I don't know if it's like that for everybody else, but for me, it looks blurry.
There, is that better? Because it clicked on that.
Okay, there we go.
Okay.
There we go. I can see it now.
All right, so I'm just going to clear off everything that I have here on my chart, and we're going to start with a fresh chart. We're going to use UJ because, like I said, UJ does structure the best. So we want to give you something to look at that you can follow along. Okay, so the first things first, when you're looking at your chart, when you're looking at your chart, you're going to notice that over here on this side, let me bring it out just a little more. Over here on this side, you're going to see your price level or your conversion rate, which means if you were to take $1 US and exchange it for a yen, the Japanese currency, exchange it for a yen, for the $1 US, you would receive $107.29. For the $1, you will get that in the yen. So that's what that means. That's just information based only. You don't really need to utilize this, but this is just something that you want to know. It's also called the floating exchange rates, which are based off of micro and macro economics within the economy. This is how we make money with Forex, is by using the macro and micro economics. So basically, we do top to bottom analysis by using the 4 major time frames. So we use the daily chart. We also use, y'all faces are in the way, I'm sorry. Okay, so we use the daily chart, the 4-hour chart, the 1-hour chart, and the 15-minute chart. Each chart represents a different thing that we do for it. So basically, when you're on your daily chart, you're going to be looking for direction. When you're on your 4-hour chart, you're looking for momentum. Your 1-hour chart is going to be for your take profit and stop loss. And then your 15-minute chart is your entry. That is the most important chart that you guys are going to mark up, because that's going to give you your primary entry point for getting into a trade. Without it, you're basically just guessing where to get in. So you do want to have your 15-minute chart. Now, you do have some alternative entries if you miss it, but this is like your best option. This is the one that you really want to take into account to try to get. Now, just to let you know that everything that happens on these lower time frames, your 1 minute, your 5 minute, your 15-minute, those are actually mocked up onto your 1 hour, and then again to your 4-hour, and then your daily. So looking at your daily chart, when you look at your candles, always remember that each one of these candles represents 1 day. So 1 day, 24 1-hour candles, and so on and so forth. So the candle that you see right here in the very front, that one is for today. This one over here is going to be for yesterday, Monday. And then this candle here, because the markets do not move on Saturday and Sunday, represents Friday. And you're going to always be able to see that. Put it on your cross. And if you look at the very bottom, it tells you what that candle represents. So like this one says 417, this one says 416, and this one says 412. So you notice it skipped. I'm sorry, 413. And then you notice that it skipped 413 to 416, skip Saturday and Sunday. So there's no trading on Saturday and Sunday unless you've married a trade and you're holding it to get more pips, hopefully in your favor. Alrighty. Now, the reason why Robert has us using TradingView is because of the convenience, and it's an updated. He did mention before that the MetaTrader 4 platform is a little bit outdated, and some of the tools that he uses is not available on MetaTrader 4. It's only available on TradingView. Did somebody have a question? Okay, never mind. Alrighty. So first things first, once you're on your chart and you're on your daily chart, let's just make sure that you guys are on the right candles. You don't want to be on these candles here. If your chart currently looks like this and you need to change it, basically. We don't utilize these charts because these candles actually represent fluctuation of price. So it's very hard for you guys to be able to distinguish your trends. And we use the trends to determine our highs and lows. So if you do have your chart looking something like this, and I do hope that everyone is following along as we go, because it makes the learning process a lot easier for you. But if you do have your candles on something like this on your daily chart, then just simply click up here, and then you want to go to the Hikinashi candles, and here you can see the trend. As you can see, from here to about down here, on your daily chart, USD JPY was on a downtrend. It's now going to reverse and start going up. So that's why we use it. So I want to talk a little bit about support and resistance. So support and resistance is like your ceiling and your floor, basically, on your charts. You're looking for where the candles got to a certain level and stopped and changed positions. Noticeable change in direction. So you have your candles that may come in here, and then they will go up, hit it, and then they will reverse down. This is going to be your ceiling or your resistance. Down here, if the candle comes down here, hits, and then reverse and goes up, and you have your noticeable change of direction. And down here is going to be considered your support or your floor. So you'll notice the market move in between until it makes a breakout. And then it either break out to the bottom or it could break out to the top, either or. But that's how you know where you find your support and resistance. How do I get those off? Okay, so marking up our charts. There's two different types of support. You have your minor support and your minor resistance, which is most commonly taught. If you've gone through IML, which everyone on here should have, you've already learned about your minor support and your minor resistance. So what Robert is teaching everyone is going to be your major support and your major resistance and how to find those. And we find those by using the daily chart, the 4-hour, 1-hour, and the 15-minute chart. So to mark up your to mark up your daily chart, we want to use our horizontal line, and our daily chart is always marked up in burgundy. We use different colors to signify each chart. So your daily chart is going to be burgundy, your 4-hour chart is red, and your 1-hour chart is orange, and your 15-minute chart is yellow. So pretty much the colors go straight down the line. Easy peasy. All right, so looking at the daily chart down here, you want to get right up on the very bottom of the candle. You want to get at the very bottom of the candle where the change of direction is most noticeable. So we see the market moving, and we see it moving where it came all the way. Where the market came down, hit this area, and then it reversed and went up. So we see that. So this is our support. This is our floor. This is where the low is. So whatever you want to refer to it, low, support, floor, but this is what it is, and this is where you find it. Now you want to find your high. And so your high, you want to do the exact same thing. You want to bring your line down to the very top of the candle, and you want to make sure that you're using the candle and not the wick, because the wick represents exhaustion of price. So basically the market moved in that direction, but it could not sustain that direction. So we use the body of the candle, because the body of the candle is where the market was stable and it actually opened and closed. So that's why we don't use the wicks, in case anybody was wondering. So you're going to go here. Normally we don't mark up our charts on the weekday. We're just doing it because today is training day for beginners. You always want to mark your charts up on Friday, because by marking the charts up on Friday, the market has already closed after 5 p.m. and it's not moving. If you mark your charts up on a moving weekday where the charts are moving, especially if it's like you're trying to get in a trade and you see the markets are moving, and they can move very fast at times and be very volatile, you may blow your highs and your lows, just because the market's already moving, it's doing its thing. So you're not going to have a stable chart at that point. So you always want to give yourself the highest probability before entering a trade. So you always want to mark your charts up on Friday, and then you can use extensions and so on throughout the week once you start noticing the market making higher highs or lower lows. And then that way you have a starting point. All right, so after you found your high and your low, what you want to do next is drop your fibs. And on each chart, you want to drop the fibs in the direction of the market. So the direction of the market has reversed and it's going up, but then you have your 2 red candles. So I would normally drop mine with the most recent candles, because this is the daily chart. So this is what the market is pretty much doing for the day. It's going down for the day. So it's in a bearish position. Now, if your fibs don't look similar to this, you know, get with either your upline, or you can get with me, Chastity, anyone that's in the advanced group or the secret society group, and we can help you get your fibs set up correctly, because this is something that you're going to need, because this is going to help you know where to enter the market. So once you have your fibs down, you want to put down.
Yeah.
Yes.
I'm on the same chart as you, right? And my candles, you got a red candle. I have a green one. Your little doji candle,
Which
right?
chart are you on?
I'm on the USD JPY, right? Oh, yeah.
Yep. You will have that if you are looking at the regular candles. What we're
Nah, I'm on the Ichinaki, whatever you guys call it.
Which platform, Tina? Because you know we use the FXCM. Is that the one that you're on?
The FX.
When you put your whatever currency pair in, we usually use the one you have to type it all the way in, like USD JPY, and then the first one that comes up is usually that FXCM.
Mm-hmm. All right, I'll try it over again.
Let me look at mine and see, because that's strange that you do have a.
I can refresh, but I mean it's green. I mean red.
I'll just do it over.
Let me see. Let me look at mine.
Yeah, I've just refreshed it and it's red. It's only green
red?
on the regular candles.
Okay. All right.
Did it change for you?
Yeah.
Okay. All right. So once you have your fibs down, you want to put down a dotted line for your 0.382. And this is something I seen Pam do, because I normally just be trying to like find it. But now that I've seen this, I didn't know this tool was on here. This gives you your
exact number.
Yeah, exact number for your fib for that line. So okay. And let me. I got a pen. Yeah, right here. Now I write my numbers down as I go, because I do one text box when I'm done. Just it makes it easier for me, because as I move through the groups, I realized that there was a lot of other things that I was learning and putting on my charts as well. So it just made it more concise and easy for me. But once you're done with the 1 hour chart, if you are following along, this is something, your chart should look something like this. And then once you've completed this, you're just gonna move over to your 4 hour chart, which is for momentum. And basically what we're doing on our 4 hour chart is we're just gonna mark our high and we're gonna mark our low. Each one of these candles represents 4 hours. So that is 4 of the 1 hour time frame candles, and so on and so forth. So you wanna grab your horizontal line, you wanna make it red, you want to drop on your low. Again, we are looking for the noticeable change in direction. And then we want to mark our high. And we're always looking for the immediate. When we go further back to the left over here, sometimes like in IML, or sometimes if you watch any YouTube videos, you will hear people saying that, you know, they mark their high based off of something that they found way back there. That's okay, because that's probably how they learn the trade and it works for them. But what we're learning to do is read the immediate information, everything that is right there in front of us, because we do not trade in the past. You can't make money from yesterday. You can only make money from today and tomorrow. So you always want to look at the information that is right at hand, right in front of you, in order for you to be able to make a good decision on what you are about to get in for your trade. Now, on the 4-hour chart, you do not drop your fibs. I will repeat, on the 4-hour chart, you do not drop your fibs. It's strictly for momentum to see the strength of what the market is doing. So then again, we're just gonna repeat it. Go to our 1-hour chart. Our 1-hour chart, we utilize the color of orange. Let's make sure. You change your color to orange because again, we just go in direction of the color. So daily, 4-hour, 1 hour, and then 15-minute. So again, we're looking for the noticeable change in direction. If you need to like stretch out your chart so that you can see exactly where it changes, then stretch out your chart so you can see exactly where it changes. And again, we always want to use the information right in front of us. Now, because this is a weekday and because the charts are moving, we will oftentimes, or sometimes I would say, find ourselves with identical highs and lows to some of the other charts. It happens, but it's only because the market is moving. And so we're using the information that is right there in front of us. And please feel free to ask questions. And don't wait to the end, because if you have a question, go ahead and ask it while it's right at the forefront of your mind and it's fresh, because maybe someone else has the same question. So on our, let's see, our daily chart was bullish. And I'm sorry, I write down as I go, so so our daily chart was bullish. Now our 4-hour chart is bearish. So with that, I write that down because that is the direction that I need to drop my fibs. No, our daily chart was bullish, bearish, I mean. And then this chart is bullish. I said that incorrectly. I apologize about that. So you want to drop our fibs in that direction. So you're going to start at the top where your resistance is, and you want to bring it all the way down to your support. And then you want to drop your horizontal line, which is dashed. You want to drop it on your 0.382. We use the 0.382 because 0.382 represents smart money. And I did post that for the ladies, but I will post it for the beginners group as a whole, because it tells you exactly where you fall in the trading and why you use certain numbers. Because the banks come in at a certain point, and then the banks and institutions come in, I believe at the, is it the 618, Chastity? I think it's the banks come in at the 618, and then somebody else comes in at the 50, and then we come in at the 382, because that represents exactly where the market is going to be at, or where the market is moving. So I have my H1 at 107.131. So that's where I drop my line. And then I'm just going to move on to my 15-minute chart. And then just change the color from orange to yellow. And then make sure my line is solid. And then I'm going to select my high. Remember, we don't use the wick. And then I'm going to select my low, which is the immediate The noticeable change in direction, sorry. And then this is also a bullish movement. So I am gonna drop my fibs from my high to my low. And then once again, I am going to do my dotted line.
Why do we drop it from high to low when it's bullish? And I thought it was low to high.
Oh, you know what? You are right. I said it wrong, and I did it wrong.
Okay.
I said it wrong.
Not a problem. I was just making sure. I'm like, wait, hold on. No, okay, go ahead.
Right. I'm just gonna double check on my other one too, then, because I did it that way on that one. But thank you.
I thought it was me, girl.
So, 107.063. Now, as you learn like little things, you're going to come up with your own, it's inevitable. You're going to come up with your own way of doing things. As long as you stick to the rules and the guidelines, you'll be okay. Like, for instance, some people, they wait to the very end to do their fibs. I chose to do mine as I go, just kind of, you know, doing it that way. But that's me. If you want to do them at the very end, there's nothing wrong with that. If you want to do them as you go, there's nothing wrong with that either. So there's no right or wrong way in that perspective. All right. And so my 15-minute was 107.063. Okay. So our 15-minute chart, as I mentioned earlier, is our entry point. Our 1 hour is our take profit and our stop loss. And then our daily is our direction. Now, ideally, you want to get in, you want to set your call level for 107.063. Now, if something were to happen and you can't get in at the 107.63, if this was set up on Friday, this may be further apart, like lower for the most part. You would use your 1 hour 0.382 or your daily 0.382 as your secondary entry points. So if the market has already gone past your 15-minute entry point, you can possibly get in again with the proper testing of your candles. Like, make sure you have your retest. If you have a retest on your 1 hour, then you can use that as an entry. If you have a retest on your daily, you can use that as an entry point. So looking at our candles, what you're looking for when you're looking to see if this is something that you want to get into, one of the things that you're looking for is you want to look for your candles. You're looking to have either 3 candles above or 3 candles below. By having the 3 candles above or below, okay, thank you, Debo. So the bank comes in at the 2.37 on the Fibonacci, is what Debo was saying. So, and then I believe there's another one on the 50. But like I said, when I look over at my picture, I can tell you, and I can drop it in the group so you guys can see that as well. So as you can see, you want to have 3 candles above, or you want to have 3 candles below. Now, remember that when you see a wick, The wick is exhaustion of price. That means the market could not maintain this position. That's why you'll see it come down and then you'll see it draw back up. It couldn't stay there. So that is not something that you want to rely on as your entry point. There is something called wick trading that you will learn at a later date of time. But for now, when you see a wick, just know that the market moved in that direction, but it could not maintain that direction. So you don't want to rely solely on saying, this is one of my candles to count towards as your entry point. So we have, so, not to confuse anybody, but when I say you want 3 candles above or below, a good set of candles to use, because you have the body of the candle actually touching your 382 and going past it, and then the second candle came in touching and going. Then you have the third. You have the third, which is open and closed under your 0.382. So that's a good set of candles to use. Now, when you have this is your confirmation that you're on a downtrend at that point. Doesn't mean that you need to enter once you see the third candle. Sometimes it is better to wait for the fourth candle, because as you can see, there was a small pullback right here. Okay, so you guys, if you look in the chat real quick, Debo is explaining the fibs and what's considered smart money and where the banks get in and why we get in where we get in, which is at the 0.382. All right. So once you have this, you want to wait for the retest. That's why I said just because you see the first 3 doesn't mean when you see that third candle you want to get in right away. You always want to wait for your retest. Remember, no retest, no entry. So what we have at this point is we have a slight pullback for 2 hours or so. There's a slight pullback, and then the market did not, continue on an uptrend. It went right back down on the downtrend. So we have our 1, 2, and 3 candle position here. Right here. Now, as you can see, it came down, it broke through the 4-hour and the 1-hour support, but it did not break through our 15-minute. It wicked it, it didn't break through. So it respected the 15-minute support area, and then it broke back up to the uptrend. So at that point, we got another set of 3 right here. Once we get this set of 3 candles, then what happens is that this downtrend, for the most part, you can just go ahead and not do it. You just don't even look to sell at this point, because we want to wait for the retest. We're waiting on the retest to let us know if the uptrend is going to continue or the downtrend is going to continue. We got a indecision candle right here on our 1-hour chart, and then we got 2 full bodies. We got another indecision right up under it, and then the market moved up. So it respected all of these lower time frame. It respected the 1-hour, it respected the 4-hour, and the 15-minute support zones. So it tapped it and it bounced back up. So that's why you always wait for your retest. Right here we have 2 candles, and they're doing very, very well. So most people would jump in, but they are doing well, and you have about 5 minutes left before the next candle comes in. If the next candle comes in green and continues up, like it comes in green and it continues up and it's sitting in a higher position, that is our confirmation. Again, you want to go through your checklist, which is in your beginners folder within the beginners group, and make sure that you check off everything on that checklist before you enter into a trade. You never want to skip steps when entering into a trade, because if you do and you are wrong, you can lose money, and that's not the goal. All right. Does anybody have any questions, concerns, comments, whatnot? All right. USD, JPY. And I forgot my indexes, so just a second. I forgot my indexes, but we're gonna touch on that as well. DXY is for the dollar, JXY is for the yen. Then our daily chart, which was for direction, was sitting at the 106.505, and it was bearish. And our 4-hour chart, it was for our momentum. And our 1-hour chart, it is for our take profit and stop loss. And it was 107.131, and it was bullish. And then our M15 was for our entry, and it's 107.063, and it was bullish. All right. And then we need our take profit, and then we also need our actual stop loss. All righty. So now
I have one thing.
Yes. Yes, ma'am.
The indexes.
Okay.
Did you go over the indexes?
Not yet. That's what I was saying. I'm gonna go over the indexes. I didn't do that part yet.
Okay, go ahead. Sorry.
No problem. So once we determine where we're going to enter in, and we always enter in on the 1-hour chart, we find our entry point on the 15-minute. We find our take profit and stop loss on our 1 hour. But when you want to get into a trade, make sure that when you're on your MetaTrader 4, whether it's your phone or on your laptop or desktop, make sure your MetaTrader 4 chart is on the 1-hour chart before you click new order. And that's because on the 15-minute chart and lower, the pips are not as many because the spread is wider. So the wider the spread on your charts, it's the same either way, but the charts don't catch as many pips in that spread. So if you are only looking to catch between 2 and 5 pips, then you're looking at maybe trading on the 1-minute chart, because that's what the 1-minute chart will yield. If you are looking to catch more pips, then you want to trade or enter your trade on the 1-hour chart, because that will give you the more pips, which means more money for you at that point. So once you determine what your direction is going to be, and just looking at this chart, we now have 3 candles above. This candle came in higher than the previous candle. So we do have a confirmation. So if our whole checklist is good to go, at this point, you're going to put in what's going to be your long position or your short position. Long position means buy, short position means sell. So because we are wanting to do a long position, what we would do is, if we are using the 15-minute numbers, you're going to drop it right there. And we always trade at a 3-to-1 ratio. By trading at a 3-to-1 ratio, that means that you are risking 1 pip to gain 3 pips. You never want to risk more than what you're going to gain, and you never want to make it a 50-50. You actually want to make it worth getting into. So how to make that show up for you here on your charts? You're just going to come over here. Never move the green section. You always want to reduce your red section. And when you reduce the red section, if you look in the center right here where it says risk to reward ratio, it'll change. And that will let you know when you hit your 3-to-1 ratio. So you want to get as close to 3 as you possibly can. I actually hit 3. I've been hitting 3 all day today. But you want to get as close to 3 as you can. Sometimes you might get like a 3.01 or a 2.99. But as long as you're as close to 3 as you can possibly get, then you're on the good. Now, the reason why I say don't move your red, because then that starts to throw your ratio off. Now you're risking like a 4 to 1, things like that. You don't want to over trade. You want to, you know, go in on you want to use proper risk management at the end of the day. So by using the 3 to 1 ratio, you're saying you're going to risk 1 pip to gain 3 pips. So in this scenario, we're risking 3.4. So we're risking our 3.4 pips to gain 10.2. So if you're using dollars, you're risking $3.40 to make $10.20. Does everybody understand that or have questions on that part? Yes, no, maybe? All right. So how to know where your stop loss is. So if you take your long position indicator right here, and you look and you'll find it on the side over here, you'll see that it gives you your numbers. So our stop loss is going to be, for this trade, is 107.029. And that's where you find it at. It comes in at red, so it's really easy to find. And then for your take profit, you're going to look for it over here, and it's in a little green box, and you're just going to use 107.165. So those are some numbers after you've entered in your trade. You want to look over there. You want to make a mental note, or you want to write it down and put it in your call level so that you get an alert. If you get an alert that hits the 107.165, at that point, you can make the decision to close your trade because you've made your profit, or you can look at it, and if you so choose to allow it to keep going, then you can allow it to keep going. Vice versa, if you get an alert that your trade is hit 107.029, at that point, you may want to get out of that trade, just because you've lost $3.40 at that point. And at that point, you do have to make a decision for yourself if you are going to stay in that trade and wait for it to turn around, or you can just take the $3 and just be done with it, and then maybe try to get in at a better position once you go over your checklist from your beginners folder. So I'm just going to put those numbers in real quick, just a second. So we had our take profit at 107.165, and then we had our stop loss at 107.029. Now, indexes, because indexes seem to be just a little bit of hairy bear, I guess you could say, for some people. But when we're looking at our indexes, you're always looking to check to see if the currency pair that you are looking to trade for that day or that week, you're looking to see if it's weak or if it's strong. So we're using USD JPY. So for the dollar, you're going to type in DXY. And you always want the one that says index. You always want the one that says index. The information that you're going to use on here is going to be right here. That's the only information off of here that we need from these indexes. You don't need to look at the charts unless you're just going to trade the dollar itself. But since we're not doing that, we're trading the USD versus the JPY. That's the only information that you need. Once you have this information, you do want to write it down. I say write it down. Now, some others may say different, but I write all of it down, the 89.51, which is the value of the dollar at that moment. I also write down if it's negative or positive, so if it's green or red. And then I write down all the numbers, the 0.03, parentheses, 0.04%. Now, the most important part of that, once you have that information, you want to make sure that your currency is in a strong or a weak position. So the dollar currently is at 3%. Once the dollar hits about 10%, and I apologize, it's hard to write with a mouse, but once the dollar hits about 10%, that is going to let you know that the pair or the currency that you're looking at is going to continue in that direction, or it's getting stronger. So once you hit 10%, then you can say that this is a strong momentum for the dollar or the yen or whatever pair you're looking at. So you always want to look for it to be at about 10% or better. So 10, 11, 12, however, you want it to be at that. Now, here, get out. So for the yen, it's going to be JXY. There's a common theme to a lot of these, and that is they end with XY. So that's kind of the easiest way to remember it if you can't really think of how to look up your index. You just want to add XY. So whatever it begins with, XY, unless it's something like the New Zealand dollar. You wouldn't use the Z, I believe it's NXY that you would utilize. So we're just switching over to, well, I think I am. Yeah, okay. So looking at the yen is sitting at 11%, which is, about 8% greater than the dollar. So at this point, you're going to say that the yen is stronger than the dollar because it's at 11%. It's actually pushing in its direction. So even though the yen is in the back and the dollar is in the front, in this instance, the yen is actually stronger. The dominant pair is usually what guides your pairs. So if you have like GBP, JPY, then that means in that particular grouping, that means the British pound is the dominant pair. USD JPY, that means the dollar is the dominant pair. USD Swiss, the dollar is still the dominant pair. So your leading pair is your dominant pair. I keep hitting that. I'm sorry. So somebody had something. Oh, okay. Let's just see. Okay. All right. So before I go any further, does anybody have any questions, concerns, anything?
So like how the JPY is stronger than the US dollar, it's a sell, right?
It does, but this is also you got to remember that right now between 7 p.m. and 2 a.m. or something like that, or 6 p.m. 2 a.m. This is the Asian session, so it's the retracement session. So everything that happened earlier is gonna get undone. So it moves differently, and you never trade the Asian session because it's more unpredictable and there's higher spread and it moves a lot slower. So you never want to trade in the Asian session.
Yes, it does.
You want to trade the London session or the New York session. And if you looked in your beginners folder, I had a chance to go through some of the videos in the beginners folders. When you are trading, the Asian session is a no-go. The London session is the true trend, and then the New York session is the new trend. So the easiest way to remember it is New York is new, and London is true, and then Asian, don't even worry about it. Does that help? Okay, baby. All right. Yeah. All right. Okay, so the Asian session is 5 to 11. So you never want to start trading between 5 to 11 Sunday, Monday, Tuesday, Wednesday, and Thursday, and then the market closes at 5 o'clock on Friday. Remember, you don't trade on Monday and Tuesday because Mondays and Tuesday are your trap days, and that is also a part of your trading plan. If you are following your trading plan has a schedule already set for you to be able to trade on Tuesday, Wednesdays, and Thursdays. So, the smart thing to do would be to follow your trading plans. All right. Is there anything, Chastity or Debo, that I may have missed?
No, I don't think so.
All right.
Yeah. You can trade on Monday. Well, no, not Monday and Tuesday, Sunday and Monday. And you have to remember, in the trading world, the trading is like a day ahead of us, which is like, what's her name? Yanni? Am I saying that right?
You're like lagging. Sorry.
Question answered. But she had a question and a thing saying, so no trading on Monday and Tuesday. It's Sunday and Monday.
Sunday and Monday, yes. So there's a couple of patterns to the market, which is the market structure. You should have at least touched on that through your iMarkets Live training, which is your market structure. There's 3 significant patterns that you look for, which is the VMW structures. So when you see a V, that's going to be your fluctuation of price. When you see the W, see if it'll let me. See the W, that's you're gonna look for your neckline. Basically, if you've ever looked at the harmonic scanner, for those of you who have been on your IML, you notice that it says the different patterns. What you're looking for when you see this W pattern is you want it to break out of the neckline. So even if it's a weird W like this, there's still a neckline to it. There's still, well, I may have drew that wrong, but there's still a neckline to it. Once it breaks out of that neckline, then that's when it's broken out of there, and it's gone into starting a new support and resistance. So your old resistance just turned into your support, and now you're establishing a new resistance. And then you'll see the market possibly move back and forth within that one. It can change, it doesn't stay the same, but now you'll see a new one. So here was your previous resistance, which has now turned into your support, and then you have a new resistance. And then the same scenario with the W is the same with the M. As you can see, you have your fluctuation of price right here. It respected the support, came back up, probably touched the resistance, came back down, and then you'll see it possibly break through to the downside. And then at that point, you're going to establish a new support and a new resistance. And we want to trade within these here because that's where I guess you can say we understand where the market is moving, and it's easier to not predict, but to react to what the market is doing, because we're expecting it to go to the resistance and possibly turn down. We're expecting it to go to the support and possibly going back up. So we're looking to make money in the middle. Am I close? Am I wrong, Debo, Chastity?
You talking about?
No,
You
you
talking
good. You
patterns?
good.
Oh,
You good,
hey, Rob.
Tina. What's
Okay.
going on?
Okay. So you never want to risk more than 10% of your accounts. If you've been following your trading plan or at least looked at your trading plan, you never want to risk more than 10% of your account. So that's where the 3-to-1 ratio comes in. Also, one thing that you're gonna have to possibly learn is to sit on your hand when you've already accomplished the goals that are set in the trading plan for the day. If you feel the need to continue to trade, you have a demo account. Use your demo account to test your theories. Use your demo account to learn your pair. You want to become very familiar with your pair so that when you see it do certain things, you know how to react and respond to it accordingly. Alrighty, so according to the notes that I printed out, that is it, ladies and gentlemen, unless you have any other concerns or questions. Or if Chastity, Robert, or Debo want to add anything else.
No, you pretty much good. Y'all don't got no questions? Nobody?
What do you say? No questions, no answers?
That's it. That's it.
Right. Tell them,
That's
ask
it.
me no questions. I tell you no lies.
That's it. But it's how everybody doing though? How everybody been trading? Trading week's been going.
Good. Tina, you want to stop? You want to keep recording this part?
I'm
Oh,
trying
yeah,
to stop it. Okay, that says share. I don't know how to. I do, but it's not giving me the option.
There you go. There you go.
No,
It should, it's